Excellent. All right, everyone. Welcome to the inaugural episode of the Crypto and Muay Thai podcast. I'm Christopher Brookins, your host. Obviously, we'll be here talking about a variety of topics with a particular emphasis on all things cryptocurrency, blockchain, and also some more fun topics like martial arts as well. Today, for my first guest for the episode, I'm very fortunate to have Daniel Mross with me. He is the CEO of Altangent Labs, and he is also a partner at Maximalist Capital, an investment fund focusing on Bitcoin as well. Daniel has a very storied history from producing one of the original documentaries on Bitcoin that were ever produced, and he has been involved basically since the inception of what has become a global movement, not just of Bitcoin, but also alternative forms of mediums exchange, assets, stores of value, blockchain, pretty much everything that you see now within the cryptocurrency and blockchain space. Daniel was right there at the spearhead for. So with that further ado, Daniel, welcome to the podcast.
Hi, Christopher. Thanks for having me. But honored to be your first guest on the podcast.
I appreciate it. I appreciate it. It's the Pittsburgh connection, so we're very lucky to have a lot of smart people within a stone's throw of our great city. So today, I want to have a conversation and essentially have you and walk me, but also the listeners, essentially through your entire journey, because as I mentioned earlier, you've got a very long and storied history and a very interesting history with this space. So I want to kind of take that piece by piece. Obviously, we'll ask a few questions and we'll continue to move along the path. But first, tell the audience, a little bit about yourself, maybe a little bit about your background, and then also, fast forward to where you are today.
Sure. Yeah, I guess, it all goes back to when my parents picked up a personal computer and I put down my bass guitar and started hacking around on the computer. Most of my career, I was a database administrator. I wish I could say I was there from the very inception of Bitcoin, but I actually didn't really get into it until around early 2011. But what attracted me to the space was, I kind of was a fan of Ron Paul, kind of, started paying attention to a little bit of politics that were going on when he was actually running for president. And it was really the first time I kind of looked into or even thought about, monetary policy, central banks, all those things that, to me were nothing more than like a history lesson in school, was something I kind of really was looking into. I was like, that's how that works. I never really thought about money. I never really thought about how all these things go. And Ron Paul was a big proponent of, the gold standard or, sound money. And I didn't really know what those things were. And, I was interested in what Ron Paul was always talking about. So I looked, at one point I read that he was influenced by a book called The Road to Serfdom by Friedrich Hayek. And I thought, well, I'll read that book. And I read The Road to Serfdom, and it was kind of like a little bit of an epiphany for me. And that's kind of what really started getting me interested in a lot of the aspects of money and society and politics and all those things together. When I first heard about Bitcoin, a friend of mine told me about it. He was like, "Hey man, there's this thing called Bitcoin. It's like this digital money. You should really check this out. It sounds like something that you'd really be into." And I was like, okay, I'll check it out sometime, sure. And then like about a month later, he was like, "Dude, you got to really check out this Bitcoin. Did you check it out? I told you about it." I was like, "No, I didn't." He was like, "Man, you're missing out. You have to like look into this." And so I looked into it and I was like, "Oh man, this is actually kind of interesting. This is like a database that's money that's and there's some distributed computing here going on." And before that, working as a database administrator, I was always into these distributed computing projects, like the SETI at home, finding aliens or whatever. And I was particularly into the protein folding ones, the first ones where they were trying to get, they were like, "Hey, we got the internet, we've got all these computers. Let's take all these computers and have them solve a problem, and we can basically, have all these computers act as one big supercomputer." And so I was the guy in my cubicle that had like 6 computers under the desk, and they were all doing protein folding. And people were like, "What are you doing?" I'm like, "Oh, we're gonna cure cancer." And So, when I started reading about Bitcoin, I was like, oh, this is like a money database. Oh, and there's a bunch of distributed computing processing going on. This is relevant to all my interests, it seems. And started reading more and more about it. And like a lot of people use the term, and I have to use it as well, as a rabbit hole. And I fell into it, and my wife will back me and say that that there was a day when I had this aha moment, and nothing was the same ever again. I spent way too much time thinking and talking about Bitcoin ever since then.
Yeah, I definitely agree. It's a sentiment that is second, obviously by me, but also by a lot of people that are within this space, or like, tell me more about this. It's a very slippery slope to where if you find that it hits all of those adjacent interests that you might have had, whether it be personally or professionally, or obviously experience-wise as well, it's gonna take you down, just like you said, a rabbit hole very, very quickly, and your life will never be the same. And what I think is super interesting is it encompasses a lot of different things. So it hit at an intersection of a lot of different things for you, but those are entirely different than all the things that it hit for me, where I would essentially have the same exact story and say, oh, it hit this, it hit that, it hit monetary theory, economics, it hits analytics, it's financial markets, and all those things. So I think that's another thing that makes Bitcoin, but also this space, so attractive and also so contagious at the same exact time. It's still okay to say contagious in this
I mean,
time and
it is.
era.
I would say it's contagious. Look, Bitcoin is viral, and it has to be, in its very nature. I was one of the things I always like to think about is Bitcoin has grown to where it is today, and it's been completely voluntary 100% of the time. And as somebody who would say I'm libertarian in a lot of my principles, voluntarism or voluntary interaction is something that is a very core foundational principle that I believe in. And the fact that Bitcoin's gotten this big and nobody's been forced to use it, no government has forced anybody to use Bitcoin. It's just 100%. It's an option. It's out there. If you want to use it, you are welcome to use it, and there's nobody that will stop you from using it. Or, well, depending on where you live, maybe there's some people that will try to stop you, but they'll have a hard time. And that openness is really, and that ability to grow this to this size purely from people's voluntary participation is something I think that's really amazing about Bitcoin.
I couldn't agree more. I couldn't agree more. So tell me about some of the early days. So you had your friend sort of introduce you to the concept, but also, at that point, I believe some of the original Bitcoin were being minted at the time. So it was beyond a concept, beyond the white paper. It was an early stage technology, was that there. So what was your initial foray after you went down the rabbit hole of reading and understanding? How did you initially get your hands wet?
I mean, I had so the at the time, in 2011, the kind of center of the Bitcoin universe, at least in terms of people socially interacting about it, was IRC, and then on the web it was Bitcoin Talk, the Bitcoin Talk discussion forum. Bitcoin Talk has just an amazing archive of Bitcoin history there. It's a lot of the old discussions are still there. I was I had used a lot of bulletin boards and forums on the web for many years. I was into cars and things like that in the past. So we had, all pretty familiar with etiquette and those types of things. So I started just spending a lot of time on Bitcoin Talk, and just reading a lot there, and just trying to, have these mini epiphanies one after another when you finally, you've been into Bitcoin for a few weeks, and then you're like, oh, that's how that thing works. Now I get it. All these other things make sense now. But in the Bitcoin community there on Bitcoin Talk, it was a little microcosm of, little marketplaces. People were buying and selling computer parts for Bitcoin. Mining, GPU mining had been a thing for a couple of months, and there was a lot of kind of churn there. So initially, I think one of my first posts on Bitcoin Talk, I wanted to get some Bitcoin, and I sold an Amazon gift card. I had $100 Amazon gift card that I sold to somebody, and I gave them the code, and they sent me Bitcoin for it. But prior to that, there was a guy here in Pittsburgh who runs, I think, I want to say it's the oldest Bitcoin business in existence. It's an MMO called Dragon's Tail. And he was writing MMOs before this, but he was the first one that integrated Bitcoin into the game. And so, you know, I think it's still running, but I went up to his office one day and I said, and this was before I was on the forums, I said, hey, I want to buy some Bitcoin. And so I went up there and I handed him some cash and I installed the software on my computer and he sent me some Bitcoin. We waited while the blockchain synced there. And then all of a sudden I had this little thing and it was like, oh, I think it was like 100 Bitcoin or something like that. And it was like, oh, there you go. I'm like, okay. So either I just like wasted a lot of money and this is really stupid. It wasn't a lot of money. Bitcoins were like, I think it was $500 or something that I spent, which, I mean, it was, you know, I was like, I hope I didn't waste that. But, you know, I'm like, oh, now I have a number on my laptop. And so I went home and I remember sitting there staring at it for a while and I'm like, so what can I do with this now? Like, do I just let it sit here? What's the point of this? And so I started looking at websites and I'm like, oh, well, you know, Bitcoin. And there was like these wikis that had indexes of different sites that, you know, accepted Bitcoin. And, you know, some of the old famous ones were there like, oh, you can buy alpaca socks for Bitcoin. But there were a lot of these like weird, sketchy little gambling sites. So it was like a coin flip site where you send a Bitcoin in and then you hit a button and then it would flip the coin. And if it was heads or tails, you win or you lost. And you doubled or you lost it. Or these like, you know, just other little casino games and things like that. And so I was like, okay, well, you know, I'll play some of these games and, you know, I spent like almost half the Bitcoins playing these dumb games and being like, oh, this is what you can do with this. And, you know, it's a funny story now. I mean, I look back at it and go, I really shouldn't have done that. But at the same time, one thing to understand is in those days, people didn't value Bitcoin. People didn't know what to do with it. It was just, okay, you know, this is these tokens. It was like, I mean, my buddy who I bought them from in his game, you can watch YouTube videos. People were spending, you know, 100, 500 Bitcoins at a time buying like virtual flower seeds and planting them in a virtual garden and stuff. It's, you know, hindsight's 2020, but at the time it was, you know, nobody really knew what to do with it. And it was toy money. It was tinkering around. But on the forums, I started getting into mining. You know, I had a computer, a gaming computer. Then I had two NVIDIA cards that, you know, I geeked out and put them in SLI for faster frame rates or whatever. And there was some mining software, and it was, hey, if you have graphics cards, you can mine a lot faster than with a CPU. So I downloaded that and I started playing with that. I think it was GPU miner or GUI miner or something. It was a Windows miner. And I started mining and, you know, earned, you know, at the end of the day, I'd earned a Bitcoin or something like that mining. I was like, oh, this is cool. I can just leave this thing running in the background. And, you know, after a week or so, I was like, hey, this is really cool. And by that time, I'd started reading some more, you know, oh, this could maybe go somewhere. So I remember calling my brother who was in college at the time, one of my brothers. And I was like, hey, you have a pretty badass gaming computer, don't you? So I'm gonna send you this software with a config file. Can you run this on your computer before you leave for spring break and just leave your computer running? And he did, and I think he ended up mining a few Bitcoins as well. But I think he forgot about it, and those were lost somewhere. Because I don't know. Keep in mind, just again, back then, you know, a lot of people didn't really know what to do with it. And then I think everything kind of really came to a head when you first started seeing some of the bubbles happen in the market. My first bubble in Bitcoin it was actually a little bit later, but it was right when we had a big shoot up and the price spiked and it went all the way to something like $30. And people were like, holy smokes, you know, this was $5 and now all of a sudden it's $30. You know, that's a pretty significant gain. And I remember when that happened, I sold enough Bitcoin to buy a $100 Amazon gift card. And I remember saying, oh, cool. Now at least I got that $100 Amazon gift card back that I sold a long time ago. And, you know, now I'm playing with house money. I'm not, I'm not going to lose that $100. So, those, of course, in the long run are the things, those cycles that really seem to be one of the viral properties that attracts people to Bitcoin. Is, it goes through these crazy cycles of appreciation, and it's just part of its bootstrapping method.
It's also, not to cut you off from your story, because I want to keep going on that line of logic, but I think it's also a property of what you would constitute as free markets. More so even in the early days, like there's no central governing body that keeps Bitcoin on the rails. And going back to some of the early Austrian economics that you're sort of talking about, for those who aren't familiar, Hayek is a disciple of this branch of economics called Austrian economics, and they are probably what you would categorize as the closest thing to free market capitalism in its purest form from an economic standpoint. So I don't want to take anyone down that particular path, but if you're interested, there's tons of reference books, obviously the one that Daniel referenced as well. But I think that is what makes Bitcoin and also the market cycles very much like high exuberance and then a resulting crash, but also at the same exact time, why it's persisted over essentially an 8-year period. Let's just say that it formally started trading around 2012, and now we're in 2020, and we've still seen with relatively consistency these sort of bursts and exuberance and cycles. And that is just endemic, not only of markets, but also of free market participation, essentially, where humans, they're driven by emotions, and sometimes they overshoot in a variety of different ways, where 2017 being the most poignant example in recent history as well. So I think, again, that's another element that makes this space or this particular market so interesting, but also so again contagious to say.
Yeah, absolutely. I mean, that I think early on, even with my own or our own kind of trying to figure out, oh, what do you do with these Bitcoins? I ended up participating a lot in buying and selling computer equipment on the Bitcoin Talk forum. That was probably one of the, there was this just people would burn out. They'd get tired of mining, and they would sell their mining rigs. And I would just try to scour and find the best, deals for mining rigs, and then I would run them for a while. And then eventually, if I was trying to upgrade or do something, I would then sell my computer parts. So, and I also thought this is a great way to, acquire Bitcoins. I can take old computer parts and sell them. So I had old motherboards and, computer chips and stuff. And I mean, and that's also what really made it super fun. I remember on the forum specifically, there was a guy I was talking. I put some CPU up. It was like just some Intel CPU, some Celeron or something that I had, and there was a kid in Finland who really wanted it. And I said, okay, well, I've never shipped anything international, but sure, I'll send it to you. And just on the forum, didn't know his real name or anything. And I just gave him a Bitcoin address, and he sent me some Bitcoin, and I mailed the CPU to him, and he got it. And then he went on the reviews and said, yeah, this guy's a good seller or honest. And so there was this little community of people that to them, Bitcoin was worth something, and they were willing to use it as money or in trade. And that just goes right with what you were saying. One of the cornerstones of Austrian economics is the theory of subjective value. It's things are worth. You can only judge something's value is in the eye of the beholder. And so Bitcoins might be worthless to a bunch of people, but in that community at the time, hey, this was useful as a medium of exchange for selling computer parts. And so that was cool. I have a lot of interesting memories like that of just buying and selling computer parts on Bitcoin Talk forums, and just based purely on the reputation systems that were there. You could kind of over time get a feel for who was honest and who wasn't, and only got burned a few times. That always happens, but for the overwhelming majority of the purchases and sales of mining gear, I remember just being good deals, and they worked out really well. So it was niche, but it was pretty fun.
I think that's really interesting because, I mean, you're essentially talking about how you debugged a lot of what you would see. So it's like, fast forward to 2020, and if you were in, let's just say, Hong Kong right now, I can easily send you Bitcoin for whatever reason, and it would get there in an extremely efficient and cost-effective manner. Obviously, there's been some improvements to the core code, over that 8-year period, but you're in essence talking about how you proved out an initial like hypothetical where it's like, white paper, I think this can offer or operate as a medium exchange, potentially a store of value. I don't know if that was something that was necessarily thought about within your particular community at that time. I know obviously, given it has a fixed supply, that was something that was there from the beginning in terms of the white paper, but you guys were living it and verifying it and showing that, yes, this use case seems to have legs, at least in this particular petri dish, so that we can go to the next petri dish and then the next one and the next one, and then gradually get us to where we're at today, where I don't know how many billions of dollars is transacted over the Bitcoin network, way faster and way cheaper than conventional banks or the legacy Swift system or anything like that.
Yeah, I mean, I think it goes back to what you were saying earlier that, Bitcoin is different things to different people. So, back then that was, my primary use case for Bitcoin was buying and selling computer parts and building and selling mining rigs. But there were definitely people around then that were, really into it who thought, oh, this is going to be, the cornerstone of the global monetary system in the future. And I was one of the people I was like, hold your horses there, like. I think I remember posting and there was a discussion on one of the threads on Bitcoin Talk where I said, the overall market cap of Bitcoin right now is 45 million. I was like, there are yachts that are worth a lot more than that. Like, you guys are getting a little bit ahead of yourselves. So I was much more of a skeptic back then too of, this kind of narrative. I mean, there were definitely some people that were like, this is the end all be all and it's going to change everything. And I kind of was like, yeah, it's interesting, it's cool. I don't know if it'll do this. And I mean, certainly there was also the Silk Road was a big part of history that people don't talk about as much now, but for sure that was active then. And there were a lot of people on the forums that were pretty sketchy. There was a lot of people that were like, oh, Bitcoin is this thing we can use anonymously and we can buy and sell drugs on the internet. And so, that was actually something that was cool, but it was also frustrating because that seemed to be the first thing that really captured the media attention of Bitcoin back in 2011, 2012, when you asked people in the mainstream who, have you heard of Bitcoin? Very quickly, it was like, oh, isn't that internet like hacker drug money? And like, that was like the dominant narrative in a lot of mainstream. And it was very frustrating because I was like, no, there's a lot, it's this program, you can do all this stuff. Some people are using it like this, but don't pay attention to them. Like, this is cool. And they were like, no, this is bad. This is all money laundering and drugs and stuff. But it's funny how that narrative changed too, because, nobody says Bitcoin is anonymous anymore. It's not. I mean, you literally have a ledger of every transaction that has ever happened, permanently forever, stored on bunches of computers all over the world. So if you're doing illegal activity, you just remember that's preserved forever on thousands of computers all over the world. And it's definitely not anonymous. And so at least that's one of the things that's also changed is back then people still kind of thought, oh, this is small, nobody's going to look here. I'm using these addresses that don't have my name. That means I can do whatever I want with it. And now now it's the other way around. I think law enforcement is happy to have a giant data set to be able to mine and figure those things out. And that's a whole nother ball of wax if we want to get into the privacy discussion. But
Yeah,
we'll make it a little heady there. So
yeah, for sure. I think if we circle back to it, I think it's something that if time permits, we will, or just save it for a different day, because I think it's one of those things that you can't decouple it from this particular space. Like, that is the history of one particular era of Bitcoin, but also at the same exact time, it was very much rooted in privacy, obviously cryptography being a huge component of it. So you can't decouple that from it, but it's very interesting to see the shift that it's gone through over these years as it becomes more mainstream, where now even myself, and I'm sure you've had similar experiences when talking to potential investors, it's like, hey, this isn't necessarily private. And I would argue whenever people give pushback saying now, even to this day, that it's used for illicit behavior, illicit activities, that it's far more easy to track Bitcoin's illicit activities than if you're running the gauntlet of money laundering or whatever it is through all the different offshore bank accounts and sort of shadow banks and shadow companies that are set up around the world that have a far greater track record for a far longer time of being able to evade authorities in this particular manner. So those are conversations that I'm sure you experience to this day, that I experience to this day, that could go on hours and hours. So perhaps maybe we'll make that like a part two or something.
Yeah. Privacy for sure is a whole ball of wax, like you said.
Exactly. And there's tons of people that, are for the hardcore Dash style privacy. And then there's others that say this is actually, I'm not sure, it's detracting from all the momentum that has been gained over the most recent years whenever it's kind of like crossed the chasm a little bit into the mainstream, or at least into the mainstream mindset. But with that said, so you're in the early days, you're mining, it's still very much the Wild West. At what point did you decide to make the documentary? And what was your ultimate goal in making the first documentary, or one of the first documentaries ever, that sort of discussed this phenomenon that is Bitcoin?
Yeah, so I was living and breathing on the forums. I was in there all day. I was probably one of the first guys who annoyingly talked about Bitcoin all the time. Now that's a type, but my brothers, I would always tell my brothers about it, and they were like, "Hey, what's that Bitcoin thing? Oh yeah, guess what happened? This guy did this, or this guy over here did that." And I would just tell them these, internet drama stories of people that were doing things people were doing on the forums and whatnot. And my brother Nick had just finished a film project. He's a filmmaker, and we were talking one day, and he said, "Hey, this sounds like it's interesting enough. Like maybe we should make a little film about this, like a little mini documentary or something, like a half-hour thing." I said, "Yeah, that sounds like a great idea." I said, Bitcoin's pretty tough to kind of wrap your head around. It'd be really cool to make, a little like YouTube explainer video. Like we made like a half-hour video, kind of talked a little bit about what Bitcoin is and how it works, maybe give a little glimpse into these things that I've just been talking about. And I said, at the time, the Bitcoin community was pretty small on the forums there. And, so there were a few startup businesses, notably BitInstant, run by Charlie Shrem and a few others. And, everybody on the forums was pretty friendly with each other. And I said, "Hey, I know some of these guys that are doing some of the first startups in Bitcoin. Maybe we could even get a few interviews with them, and it'd be perfect. We can make this little explainer movie and maybe put it on YouTube." So, "Oh, okay, let's do that." So my brother started coming over and just started filming. And we talked to Charlie, and he said, "Yeah, you guys need to come out to New York and see our offices and meet us there." So we took a trip to New York and filmed with Charlie. And it was one of those things, right as we got there, things were kind of starting to heat up a little bit. And when one of the times when we were in their office, there was one of the bubbles kind of happened. And so they didn't even have the time to really talk to us. They were like, "What? Yeah, the film crew's here. The computers are all overloaded. We're getting way too many requests, way too many calls, and all this stuff is happening." My brother was like, "This is awesome. All right, go, keep the cameras rolling." And so he just started filming. And just from there, we realized that we were kind of right there at the beginning of something that was much more than just a half-hour documentary. And so he just kept the cameras rolling, and we met Roger Ver there. We met Jared Kenna, who was running TradeHill, one of the first U.S.-based exchanges for Bitcoin. At the time, Mt. Gox was the only real exchange where people were buying and selling Bitcoin, but it was a real pain in the butt to get. You had to wire funds to some holding company proxy, and it was just really difficult. Like you couldn't easily buy Bitcoin at the time, and so there were a lot of efforts. BitInstant was there. It was an effort as well to try to like make it easier for people in the U.S. to be able to buy and sell Bitcoin. And through all those introductions, one just kept meeting one person after the other, and everybody at the time was willing to engage and talk about it. So we started filming, and that just spiraled into the rise of Bitcoin. We ended up flying to Japan. We filmed at Mt. Gox. We flew down to Panama, where Eric Voorhees at the time was running one of the most famous, notorious Bitcoin companies, Satoshi Dice, which was one of the first of its kind where you could gamble using the Bitcoin blockchain itself. They had basically a list of addresses, and each address had odds, and so you could send some Bitcoin to the address with the odds that you wanted to take, and then if you won, it would send payment back to you, or send your prize back. And if you lost, it would send a tiny little fraction of Bitcoin just to let you know that you lost. But at the time, that service ended up being responsible for something like half of all Bitcoin transactions were running through Satoshi Dice, which was pretty fascinating. But we just flew all over the world and interviewed all kinds of different people, and we made the rise of Bitcoin. And my brother sent it out to a number of different film festivals. We got into the Tribeca Film Festival in New York and premiered there. So it's pretty awesome. Had our 15 minutes of fame there, and but it was certainly fun. And at the time, I think the timing couldn't have been better. There was a lot of interest in Bitcoin at the time. During our filming, the FBI and the DEA took down the Silk Road. They busted the drug market. So there was a lot of media and press about that, and it was, Bitcoin was in the eye of a lot of the mainstream news. So our documentary was kind of perfect timing for that, and I feel really good about the impact that I think we've had, because we did show a lot of different sides to Bitcoin. And I remember even during the time when we were making it, was very adamant about not just focusing on the Silk Road. I think originally we didn't even want to feature it in there, but we just wanted to really show that Bitcoin is this technology, and all these other things are how people are using this. But really, it's a computer network. It's like a big clock that just keeps ticking, and you can use what it does for a lot of different things.
What year was the documentary produced?
It came out in 2014. We had finished shooting in 2013. We spent quite some time in the edit. We had a lot of stories that didn't make it in, unfortunately, but it was released in 2014.
Do you find people still recognize you, or still talk about that to this day? Maybe even like happenstancely, or even within the space as well?
So it's probably my favorite thing about the documentary is these days, if I go to a conference or something and some random person will come up to me and just be like, "Hey, are you the guy from the Bitcoin documentary?" I'm like, yeah, that's me. And they're like, "Dude, thank you so much. I watched that, and then I totally got into Bitcoin after that, and it changed my life." And I'm like, "Yes, all right, great. I'm glad somebody freed somebody maybe somehow from financial shackles, because they maybe made an investment at the time and it worked out for them, I speculate." But that always feels good. But these days, I don't know, there's even the documentary now is dated, and I like to joke that it's, we had Vitalik when he was still writing for Bitcoin Magazine and was a Bitcoiner. It was pre-Ethereum that that Rise of Bitcoin came out, but it was right in the middle of, I think during the premiere, was right around the time when Ethereum was just starting to kind of gain some traction.
Gotcha. And we'll definitely come back to that topic later as well, because I think to quickly divert, that's one of the more interesting things whenever you and I just have general powwows and conversation about markets in general or specific projects, obviously not on the podcast, but just in our general lives, is your background is very much different to mine. So always find your perspective, especially from like a technological side, so useful to be able to look at and understand things that maybe someone with a more traditional background like myself within finance or something like that might not necessarily be able to see, because they just look at what's at on surface level. They don't have the ability to kind of peel back the layers a little bit as well. So we'll definitely touch into that. Okay, the documentary is done. And then, so how did you find yourself to where you're at today? So we're going to speed up a little bit into the current day, but how did you find yourself saying like, all right, I've kind of been here almost at the beginning and spent a lot of time in this space, educating people about it. I want to further double down on this space, this technology, these beliefs I have, and start a technology company that will spin up, one of the, one of the better data analytics and data providers within the space underneath Altangent, which is a company that you run called BlockTap, but then also an investment firm as well. So how did you go from, the documentary to saying, when was the right time, the inflection point where you're like, yep, I'm going to double down even further?
Well, there was a period after the documentary where, I like to say that was kind of where I fell away from Bitcoin for a while. And, at the time there were a lot of altcoins, a lot of,
Mhm.
other cryptocurrencies that were starting to launch. And I got kind of attracted to those. I thought, oh, you know what? Like there's some things that I still didn't fully understand about Bitcoin. And then I was looking at these other projects and thought, oh, hey, that's actually doing this faster, or maybe this is a smarter way, or maybe we can do this mining without, using all this electricity. And, now I look back and these viewpoints are, to me, they're naive, but at the time it was one of the things where, I got really attracted to competitors, and I kind of bought into this idea that, hey, maybe Bitcoin is a 1.0 and there's some other technology that's going to displace the 2.0. And, I've seen that happen a lot in tech in general. So why not, that might happen here. And I wanted to make sure that, I was keeping track of what, what was the right path, if there is such a thing. So I got really into some of these alternative cryptocurrencies, notably some of the first proof of stake cryptocurrencies. And I wrote software for them. I wrote some block explorers for NXT was one of them at the time, and some of them related to that. And I was doing just kind of independent software development, working on those things, kind of really studying those things, looking at different consensus algorithms, like really kind of spending a lot of time thinking about proof of stake and how that works. And, I did it kind of backwards. I was kind of convinced that proof of stake was a better path. And then I spent, a long time thinking about it and working on things surrounding it. And then over time, after about a year and a half, I slowly kind of came back to Bitcoin. And that's kind of really when we founded Altangent Labs. I have a longtime business partner, Brian Mancini. He's our CTO at Altangent. We'd worked together on a number of different startups in the past for many years, and we decided, we'd been tinkering around with stuff in Bitcoin. We'd written some early wallet software. We played around with, oh, maybe we should write some trading bots, or, had a lot of different ideas. And we saw a lot of these companies in 2016, 2017 were starting to actually get real venture funding for launching projects or products that would use Bitcoin or other cryptocurrencies. And we thought, well, we're good at software and we have a lot of knowledge in the space. Like that's something we should be doing. Why, instead of tinkering around, let's build some real products. So we founded Altangent Labs, and we had a number of different ideas for products. But very early on, we realized a lot of things we wanted to build, we needed a data back end. We wanted to have some data on the Bitcoin blockchain beyond, just having the blockchain on your computer. We wanted to be able to do some analysis, or, derive some statistics and some analytics. And at the same time, the markets, there was this Cambrian explosion of altcoins and tokens and all these things that happened. And all of a sudden, all these exchanges just started adding more and more and more trading pairs, and more exchanges started popping up. And so we started collecting them, and we built really very quickly, focused in on our first product, which was BlockTap, BlockTap.io. BlockTap is basically a market data aggregator. We were collecting order books, trades, and then also some on-chain metrics, initially for Bitcoin and some altcoins, but nowadays just Bitcoin. And we kind of thought, hey, let's put these all into a giant data warehouse and make it queryable. And, maybe we can build a really interesting analytics site where you can, query market data and on-chain data and try to derive some really interesting metrics, all at once. And so, BlockTop's been running now for about 2.5 years. We have a pretty massive data set. It's there's a lot of competing companies in the space for data as well. I'd say we're kind of one of the more niche ones, very focused on Bitcoin. It seems that a lot of the market interest tends to be more towards tokens and things like that on Ethereum. But we're hunkered down and focusing on Bitcoin, and that's that's kind of our long-term strategy with that as well. And then along with that, since I got into Bitcoin, even I've always had people asking me, "Hey, should I invest in Bitcoin? Hey, should I buy some Bitcoin? What's the deal with Bitcoin? Do you know where I can, should I have this in my portfolio?" And so we started an alternative investment fund called Maximalist Capital. And it's from a digital assets perspective, it's conservative. We're focused on Bitcoin. The only activity we really do is we're active in options and some derivatives, and we try to go for Bitcoin on Bitcoin returns. But really, it was created as a vehicle to give our partners exposure to Bitcoin as an asset class. And I used to say to people, "Oh, it's kind of risky. It could crash to zero. Only invest, don't take my advice on investing. Don't, if you have some money that you might lose or forget about, then fine." But today, there's been a lot of interest from traditional finance. I don't think it's going away anymore, or don't think the risk of Bitcoin going away is anything near as large as it was even 5 years ago. And the amount of people that have been asking about, how do I invest in this, keeps growing and growing. And Bitcoin as an asset class is also one of the first that really retail investors were the first to the table. You couldn't easily buy it, but you could get a GPU and do some mining, or you could use one of these early sites like I mentioned, like BitInstant or something, and go to a 7-Eleven and get a voucher and buy $10 worth of Bitcoin or something. So and then even today, most brokers, you call them up and say, "I want to buy some Bitcoin." I think right now there's a few trusts that you can invest in, and that's about it. I think the writing is on the wall there. I think that's coming eventually, but for now, Maximalist Capital is there and is a vehicle for our partners to get exposure to that asset.
No, I totally agree. I mean, obviously, I think there's way more upside. And again, this isn't investment advice from either myself or Daniel, but it's just our particular perspectives. But I think the upside, the asymmetry is definitely to the upside right now. Obviously, there's still a lot of risks associated with Bitcoin, just given its volatile nature. It goes back to kind of a little bit more of those free capitalist roots that we had mentioned before, which is just endemic of market cycles. It's going to go up, it's going to go down, but over time, at least what Bitcoin's been able to show in its short 10-year time horizon is that it's skewed to the upside. So we think that there's definitely risks still associated with it, just given the volatility where it can go up. It can be up 30% in 1 month, like January, and then it can be down, 40% the next month, or, a month afterwards, like in March. But then again, now it is firmly back into the positive for year to date. So there's definitely cycles, but I agree with you that whenever you look at it strictly like, all right, what are the odds? Like, what's the probability that it's going to go to zero? It's greatly diminished from where it was even 2 years ago, 3 years ago. So I think that makes total sense for me and probably for the listeners as well. So your investment company and also the data company, BlockTap, has a particular heavy leaning towards Bitcoin. And I can assume that sort of was founded out of the work that you had done on some of those adjacent projects after the documentary sort of came out. And I think it's really fascinating that you are looking at and working on proof of stake before it has become sort of like this avant-garde nouveau topic within the blockchain space that it is today, where every single new project that is coming out, in particular, all the Ethereum killers and even Aetherium in and of itself, is taking the leap to proof of stake versus proof of work. So I can assume that it came out of that. I would love to sort of hear about those experiences where where you kind of had a realization to say, all right, in theory, this sounded really good, but in practice, there's, limitation A, B, and C. And I don't think ultimately, it's too far gone. It will need 5 to 10 years to sort of prove out and work out all those bugs. But Bitcoin in and of itself, in its current stage, is actually still viable for its base use case.
Yeah, so I think one of the biggest differences is when I compare Bitcoin to other cryptocurrencies or digital assets or tokens or whatever, is Bitcoin is, to me, I mean, is interesting for its monetary properties. And it's not about how many transactions per second can you get. That's a database metric that's interesting for databases. Or and when you take that in the context of Bitcoin's consensus is known as proof of work. It's basically lots of computers that are competing with one another. They're spending electricity and essentially in a lottery, and every once in a while somebody wins that lottery, gets some new Bitcoins, and those that goes on to the ledger.
Can you explain the difference very quickly to proof of work systems versus proof of stake systems, just for maybe some of the really new listeners that might be on, that are like quickly kind of like Googling what these buzzwords are in the background?
Sure. Yeah, I was getting there, and it's hard to do because it's one of those. It's another rabbit hole. It's a thread to pull, but at the core of something that what makes Bitcoin so interesting is you have this thing called global consensus, which is how do you imagine a Google Doc that the entire world is using, and everybody agrees that everybody needs to have the same copy of everything that's ever happened. Oh man, this is going to be this is the tough one. Let me think. What's the best way of doing this without getting into a 2-hour rambling?
I think just keep it super simple. I mean, at the core of it, for anyone that wants to really dive deeply, there's plenty of resources, but it's like proof of work in essence is what you're talking about. There's computers distributed throughout the world,
Right.
essentially racing to solve a mathematical puzzle so that they'll be rewarded, with some fraction of Bitcoin, which has become more and more sliced, obviously, with the most recent halving. And then, proof of stake systems are different from there. So I think like super, super to the point and high level, and we'll just let the
Yeah, I mean,
curious listener.
Bitcoin is powered by electricity, basically. If you want to take it as simple as possible, all these computers all over the world are burning a lot of electricity in order to take turns being able to process some transactions or verify some transactions. The thing is, based on the work that they're doing, you can measure how much work was put into that. So we know, roughly how much electricity is being spent in order to, verify transactions, in order for Bitcoin to keep moving forward. Proof of stake the inspiration was, hey, that's cool. Can we do the same thing without using all this electricity? And so how do you do that? Well, instead of people having a lot of computers, why don't we just give them, tokens instead? And the amount of tokens that you have will be equivalent to having that many computers. And so instead of, I have 50 computers and I'm 50 times more powerful than this person who has one computer, you could say I have 50 coins, so I'm 50 times more powerful than the person who has one coin. And so if you think about proof of stake as a simulation of proof of work, is kind of an early way that people were kind of trying to compare it. The problem is that proof of stake is kind of there's no external way to measure the truth. And, it's a prickly thing to kind of get into this as well, but a more simple way to look at it is, with a proof of stake system, you have to first get some stake. You have to first get some coins. You have to buy them from somebody, or you have to buy them from an exchange. How do those coins first come into circulation? Well, pretty much every proof of stake project that exists had some sort of a crowd sale. Somebody somewhere decided, I'm going to have this system. And in order for this to work, I first have to create all these virtual mining machines and distribute them to everybody. So that in itself is impossible to do in a fair way. There's no way that you can fairly create a bunch of tokens and then distribute them to your friends and say, oh, we have this fair, decentralized kind of network. Bitcoin, on the other hand, didn't have the same problem. Bitcoin was, hey, you got some electricity, bring it to the table, and you can participate like anybody else. So a lot of times when people say, oh, these permissionless networks, one of the aspects of Bitcoin's permissionlessness is that, anyone anywhere in the world with access to electricity and mining equipment, it used to be just computers and graphics cards. Today it's mining equipment. So there is a barrier to mining entry, obviously, is getting some mining equipment. But that's all it takes to participate in the consensus. In a proof of stake system, if you want to participate in the consensus, you have to buy tokens from someone. And if you're not part of the original crowd sale or distribution or insider VC token sale or whatever it is, then your only other option usually is on an exchange or something like that. And it's in some ways maybe that accessibility is better, but in some it's different. But ultimately, I want to clarify one thing. Proof of stake systems can work. I mean, and they do work. They just they work for different purposes, and they have completely different security assumptions. And the security assumptions may not matter very much if you're playing a video game or you're, doing some airline miles or something. But they do matter when you are trying to build a new monetary system for the world to use. So that's where I really feel that proof of work is much more secure and measurable than proof of stake in terms of its security. And for Bitcoin, it's appropriate. For other networks, I mean, if you want, if transactions per second or how many dumping your tokens on clueless retail investors is what's more important to you, then sure, proof of stake seems to be the choice of a lot of projects. And that again goes with my general assumption that Bitcoin is interesting Bitcoin's really more of like a commodity. It's like a digital commodity. Pretty much every other altcoin to me is more like venture capital. Almost every other altcoin has some unknown founder or a group of people that did a crowd sale or a launch, and they kept 50% of the tokens for themselves in order to fund development for the following year, and then sold the other ones to fund a project. And that looks a lot more like venture capital. That looks a lot more like even bypassing traditional venture capital. I think that was all the rage a few years ago. Is, hey, this is a new fundraising model. Say you're going to build something, issue a bunch of tokens, sell them, and then use the proceeds of that sale to fund your project. I mean, that's what a lot of projects did. I often liken that to, hey, I'm going to build an airline, so let me sell a bunch of frequent flyer miles until I have enough to build my first plane. And as you can imagine, that model doesn't always work very well. And pretty much, I think the majority of projects that launch this way fail to ever build their first plane. But I put them in an entirely different category than Bitcoin. And I think that's something that still hasn't happened largely is, people still lump everything together in, digital assets. There's digital assets, there's tokens, there's these different networks that have different purposes, but Bitcoin is more the reserve digital currency among all digital assets. A lot of people will, go into and out of Bitcoin as their kind of holding, or their goal trading a lot of other assets or tokens or cryptocurrencies is really to increase their Bitcoin holdings. If you ask people, what will be around in 5 years, what will be around in 10 years, in regards to a lot of these other projects, I think a lot of them would say, with a more high likelihood, that Bitcoin will be around. And that's because Bitcoin is very kind of conservative and slow moving, and its focus is, the development focus is always around, security, security, security. The threat model is, state and nation level actors and attackers. Some of the other networks, not so much.
No, I completely agree with a lot of things that you said right there as well. And obviously our conversations over the years have sort of helped shape that particular narrative. I agree that there's a time and place for proof of stake type tokens or technology in and of itself. And you've seen some of these trade-offs like that you were talking with probably the most pronounced example being EOS, where they essentially traded decentralization in some frame or fashion for efficiency. With only having 21 node operators versus anyone across the world that has access to electricity, like you said, and now a mining rig can participate within Bitcoin, where they said, all right, here's 21. And we're going to do that because it's going to increase the throughput for some of the different applications that they thought that were going to be built or going to be built on EOS. So a time and place for that. Ethereum continues to sort of dominate the virtual machine platform space. But I know some of the initial reservations, or not reservations, logic that brought you back to Bitcoin wasn't just seeing Bitcoin as that, store of value, that use case with excellent security attached to it, but it was also some of the technological limitations, as well. And I think probably the most pronounced example that you and I have had conversations about over the years has been Ethereum. So was Ethereum one of those ones that you looked at and studied and analyzed in the early days, but saw not red flags, but some of the disconnect between how they had that built from a technology side to in the early days to where they're essentially at now, and like still what seems to be looking to patch up a lot of the holes that they had within that technology in the early stages?
Yeah, I mean, I think one of the most fundamental realizations I had a long time ago was, and I think a lot of people believe this as well, is, when we talk about blockchains, we're talking about, a historical record of all transactions that have happened. And if you think about that, if this is going to last 20 years, 50 years, 100 years, blockchains just keep growing, and they keep growing indefinitely. So naturally, if you want if you want it to last a long time, you're going to have to consider scaling, or how much data needs to be processed. And one of the things about Bitcoin is when you download the Bitcoin software and you set it on your computer, it goes through and it downloads every single transaction that happened since the beginning of time. But not only that, it goes through and it processes and verifies and does all the cryptography and does all the checks and processes everything. So it does 10 years worth of processing, and it takes about 8 hours today on a modern computer to make sure that you have the same record of what happened as everybody else. One of the core problems with competing projects that are advertising features and we can do all these things, and Ethereum is probably the biggest of these, is, hey, we're going to do all these other features. We're going to add tons and tons of features and functionality, and we're going to just store this all in the blockchain too. And what happens there is you put a whole bunch of things in the blockchain that you're going to now require people to keep and verify forever. The more you put in there, the more over time your project gets bloated and takes longer and longer to verify. And what that means is over time, today I can still go to Best Buy and buy a budget laptop and install Bitcoin and get the whole entire transaction history. If I want to do the same thing with Ethereum, a budget laptop is not going to cut it. I'm going to need to buy some pretty hefty hard drives and SSDs and spend a good amount of money. And there's pruning and there's all these ways that you can say, oh, well, you don't have to keep everything, but that also starts to compromise the security and the validity of the ledger. So basically, by putting all these features and bells and whistles on here and advertising them as all these other additional things you can do, what you're doing is you're setting the path for basically a dead end where you're not going to be able to scale it properly, and it's going to become more centralized. And what I mean by that is, as the constraints and the requirements for running a blockchain or running a cryptocurrency node keep growing, you get fewer and fewer and fewer people running that. If I want to get the detailed history of some transactions that happened in Ethereum in the first 2 years or so, there's very few nodes that have that live online where I can actually pull that. And that's just because the requirements are just, right now the full archival node Ethereum blockchain is bigger than 4 terabytes. And you can't run them on a regular hard drive. You need to RAID some SSDs or get enterprise SSDs in order to store that. Well, what that means is now you get fewer and fewer computers running that software. And again, when I go back to what I was saying, the threat model, if I want to shut down a network and there's only a handful of big nodes that have the full history running on them, well, then that's a much smaller set of targets that I need to attack and or shut down. It becomes more and more centralized, less and less distributed, and there's fewer and fewer nodes that end up keeping the whole history of what's happened. Bitcoin, there's been a big focus on trying to keep the requirements for scaling linear, so that the goal really being that at any given point in time in the near future, you could go buy just a mid-range laptop and be able to synchronize with the network and be able to run a full validating node of Bitcoin. The same cannot be said for a lot of these other projects. To some people, that doesn't matter because they're not interested in running the network. They're not interested in that threat model. They're not interested in having that level of security. They're looking more at, I think they're more used to kind of the service provider model where they're like, well, somebody else will host that. I just need my thin client and my browser to be able to, buy and sell these tokens or do these kind of things. And that's fine, but don't be surprised if one day that gets very easily shut down or doesn't work or starts having scaling issues. And we've seen that. If Ethereum as an example, they're literally rewriting it. Ethereum 1.0 is essentially being sunset, and Ethereum 2.0 is going to be the new shiny version of Ethereum, which gives them a fresh start. I'm sure they'll use a bunch of knowledge learned and make things more efficient and figure out some additional scaling. There's some cool research happening for different scaling options. Some of that might even spill into other cryptocurrencies and back into Bitcoin. But largely, if you look at Ethereum 1.0, it's basically being sunset because from a technological standpoint, it can't scale, and it's kind of a lot of the original promises were just never delivered. They just kicked the can into a 2.0.
Yeah, I think that was always one of the more interesting realizations that I had, kind of like talking with you about how you viewed that, and even which kind of allowed me to have a little bit deeper of conversations talking to other people, and anyone that I've spoken to over at Scilab at Carnegie Mellon. So we're based here in Pittsburgh for the listeners, and we've got a great sort of cybersecurity, but also pretty much anything in relation to software engineering school at Carnegie Mellon. And I'm fortunate enough to know the individual that heads up a lot of the blockchain initiatives there. And even him and I were talking about Aetherium and what seems to be its killer app now. So back in 2017, the killer app that was going to essentially catapult Aetherium ahead of Bitcoin was decentralized fundraising. Just like you said before, we don't need venture capital dollars anymore. We'll just go straight to the horse right there. We'll go straight to the retailers, and we'll use this new shiny platform to issue tokens. and then we'll build it and they will come, which obviously did not end up materializing in a lot of ways, but also at the same exact time drew the ire of regulatory bodies here within the US that has now gone back and retroactively started to deem a lot of what they've been doing as illegal securities issuances as well. But whenever I was talking, one of the things that is now new and avant-garde is decentralized finance, so DeFi, for anyone that might not necessarily have heard of it or have understanding within it. It's a wide ranging topic that I won't try to summarize here within a 5-second spiel, but it touches everything, from lending to money market rates to a wide sphere. And they think that that is now what's going to be Ethereum's killer app that's going to take it to the next level. And even speaking with some people that have, again, the programming chops to look at the code and say, this isn't ready. This isn't ready at all. You cannot put a significant amount of real world value like a mortgage for $1 billion property or $1 billion bond on that and realistically expect that it won't get hacked and or stolen. And it was before that you kept seeing a lot of these projects essentially have their code exploited and have their funds stolen. I know one, I can't remember the name, but it had like $25 million stolen from it that was ultimately returned to it. But it was before that where a lot of the researchers are saying, I could steal this, I could overload the system right now and take advantage of it. So again, it kind of goes back to what you're talking about, to where for some reason or another, the base case or the base technology that Bitcoin was able to develop back in the early days, which has upgraded over time, has stood the test of time, whereas Ethereum still is having to try to figure it out because of all these additional bolt-ons that they're doing to try to find that killer app that's going to give it kind of its staying power over the long term.
Yeah, I would say, the history of Ethereum is just rife with hack after hack after hack. I've lost count of how many hundreds of millions of dollars have been lost. And actually that also was the turning point for me when, at first I was pretty excited about Ethereum. I thought it was pretty cool, but the infamous Dow hack was one of the very first early ones. There was somebody launched a smart contract and it was still kind of a novel idea. And they said, hey, we're going to have this decentralized kind of venture fund where everybody can dump a bunch of Ethereum into the smart contract, and then we're going to have votes. And people can come up with a proposal for a project to fund, and then whoever has tokens in here or whoever deposited Ethereum, we're going to get to vote who gets what funding for these projects. And so it was everybody, all these early founders or insiders or people who had large Ethereum stacks early on. They just dumped tons of ether into it. I can't remember exactly. I want to say it had like 10 or 11% of all Ethereum was in the smart contract at the time. And then somebody hacked the smart contract and started draining all the Ethereum out of it. And people lost their minds. Vitalik, asked the exchanges to stop trading. And it's famously is known as the Dow Hack, DAO. I encourage anybody to listening to do some research and read about it. Because it was really kind of this fundamental fork in the road, no pun intended there, where a bunch of the developers came together and decided to bail out that smart contract. And what they effectively did is they said, we're going to undo this contract. We're going to use some fancy words so it doesn't seem like we're invalidating the transaction or undoing it. But basically they gave all the investors in this smart contract a mulligan and let them get all their money back. At that point in time, some people that were running Ethereum nodes said, no, this is, you're playing favorites here. You can't cherry pick who you want to bail out on these things. You're basically saying that the developers have control over the network. That's not decentralized. You can't pick who gets money back if some hacker hacked the smart contract. It wasn't a bug in Ethereum itself. It was a bug in the smart contract. And so at that point in time, when that code went into effect, some nodes split off the network and decided to keep the smart contract in its hacked state and allow the hacker to keep that. And that's when Ethereum Classic was born. That was actually one of the first instances really where we had a blockchain where there was, people disagreed on how to go forward. Some people went with the mulligan, the majority of people did, and then some did not. And so all of a sudden, at some point, there was the history forked, and then you had two Ethereums. And Ethereum and Ethereum Classic are both still running right now. They both have the same scalability issues. They've done some different things, but that to me was a real wake-up call that, hey, there are definitely some people in charge here. They, a bunch of insiders effectively voted themselves their money back from a bad investment. And I don't really believe this is a robust technology if this is the case. Now, they never did it again. Subsequent hacks have happened. People have lost hundreds of millions of dollars, but they did not get bailed out. And the circumstances of some of the subsequent hacks were, even to the point where it was an accident where somebody said, oops, I messed this thing up. I didn't even want this to happen. But they didn't get a do-over. They didn't get their money back. And, to me, that's just a spot on the history of Ethereum that will never be able to be lived down. Now, that obviously at the time spawned lots of discussions about, well, governance became this big word to discuss in distributed systems based on blockchains. Do we have governance in consensus? How do we determine if a theft happens? Should we roll that back? If somebody hacks a piece of software, should we roll that back if we can? And, these are kind of things that end up being circular arguments because they are, well, we're decentralized, so nobody's in charge unless we want somebody to be in charge to be able to do the right thing. And the right thing is this arbitrary thing that we can't really agree on. And having a democratic vote of, how many people want that to happen doesn't always give you the best result, considering that there may be just a bunch of oligarchs in this system who want their own money back, so they vote for it. So, it gets very, very messy, and I don't really think those debates are going away. People are still talking about governance all the time. Some of the things you were talking about too with, all these DeFi and lending and all these interesting contracts is you can just get into these very complex scenarios where it's impossible to even predict the types of hacks that can occur. If you, chain 3 different smart contracts that have 3 different functions together, somebody might find a way to front run using that based on, when blocks are being solved and the more complexity, the less security that there is. I mean, that's just an axiom of computers in general over time is complexity is the enemy of security. So, Ethereum and a lot of other projects certainly are very complex. I think we're going to mitigate those things. We're going to figure out how to do certain things in a much safer way. I mean, that's making progress and what it's about. But again, going back to Bitcoin's purpose as, a monetary reserve in the long run, you don't want to be playing games like that. You don't want to be introducing unnecessary risks into the system. With other things, Ethereum is startup culture. It's move fast and break things. And so are a lot of these other blockchain projects.
So with that sort of notion or touching on what you kind of talked about, Bitcoin being an alternative monetary system, where do you see Bitcoin in 5 years from now, 10 years from now? Obviously you're very optimistic on it, but I'll be curious if you have any sort of like just speculations or thoughts as to what would it could eventually evolve into, besides you think it'll continue to be here, it'll continue to, grow in adoption and stuff like that. I think, we can all agree that that's probably table stakes based upon the conversation that we have here. So I'd just be curious if you had any sort of thoughts and what it might look like, 5 or 10 years moving forward.
I mean, I definitely think we're going to see more adoption. I think there's going to be a lot of challenges ahead. I think right now people in Bitcoin want things like the Lightning Network to be a panacea that's going to solve all these problems. And I think that's a little naive. It has, scalability of Bitcoin, how to onboard a lot of people to using Bitcoin is a tough problem. There's only so many transactions you can do on the base layer. So I guess let me rewind even a little bit and say, even during the time when we were doing the documentary, I was buying and selling things, computer parts directly with Bitcoin. And, one of the narratives at the time was, oh, soon, stores are just going to be putting QR codes up and you'll be able to scan it with your phone and pay with Bitcoin. And what we didn't realize really at the time was that, the blockchain itself is not scalable. It can do something like 7 or 8 transactions per second or something. It doesn't make sense to, preserve and store every single little transaction for every little thing that happened globally on thousands of computers for the rest of time. It doesn't make any sense. So Bitcoin has already gone down the path since then of essentially becoming a settlement network, where, I think in the long run, we'll see Bitcoin the way it is today, just raw transactions on the blockchain will become more and more valuable. I do expect Bitcoin's price to appreciate just for a whole number of reasons. The mechanics of the system are in such a way that it kind of has to. But I expect that will, start to limit the types of transactions, at least from what kind of, I think you'll see fewer and fewer people using Bitcoin to pay for something directly. However, I really believe that second and third layer networks built on top of Bitcoin are where a lot of the transactional activity are going to happen. Lightning Network is right now the kind of main one. And if you want to think of Lightning Network as kind of a secondary network layer that's built on top of Bitcoin, where you can send some Bitcoins into this network and then shuffle them around in that network, kind of like a big thing of abacus beads, where you can shuffle the beads around between different people. And this allows you to, send transactions back and forth without putting any load or without having to store them forever on the blockchain, only the entry and exit. I think that we'll see layers built on top of that even, or other secondary and third layers that then allow Bitcoins to be used for buying and selling goods a little bit more. But I do still think that's a way off. In terms of, there's still a lot of acceptance that has to happen that Bitcoin is, a real thing and that it is suitable for a store of value. A lot of people that are in Bitcoin hardcore are already, sold on that, or they've seen price appreciation and they're, this, makes sense. And certainly, I think, what do we have? I think the Fed just dumped $5 trillion into the stock market. We're at all-time highs today, aren't we?
Something like that.
Corona and nationwide riots and businesses shut down for 4 months, and
it's tough to keep
we're at all-time highs. So certainly we are on the cusp of testing whether the theories about Bitcoin's role as a alternative monetary system are going to probably be tested within the next 5 years. I put that prediction forth that we're going to start to see, whether it's actually suitable for an alternative global currency reserve system. How that will play out, I don't know. I think I have some fears that Bitcoin will be politicized again. We don't really hear too much anymore about the Silk Road or Bitcoin is used for these bad things, but that's always on the horizon. There's always the people that have a vested interest in demonizing it and, saying, oh, XYZ country that we don't like is using it for XYZ thing that we have sanctions on or whatever. And, and then of course all the social narratives too of, oh, Bitcoin isn't green, it's going to boil the oceans and all these things. And, these narratives kind of take hold sometimes. And people are very quick to latch on to frenzied things these days. So I worry that Bitcoin is actually weaker to social attacks than the typical kind of computer nerd things that we like to think about in terms of Bitcoin security. In terms of altcoins and other coins, they're not going to go away ever. I don't think so. there's just there's always new people, and anytime there's new people come into something and they go, oh man, I'm late to this party, I missed the boat. And then there's a new shiny thing that promises to let you be early, just like the old timers were. And people do that. And then it repeats itself over and over. There's always a freshman class of crypto people who are just learning, and who, I mean, even number bias has a big effect. One Bitcoin is around $10,000 today. But this Bitcoin Cash is only $200. Maybe I'll buy one of these and it will be $10,000 one day. And like, that psychology is extremely powerful. And I think it's more powerful than a lot of people give credit. Round numbers, things like that too. I mean, look at penny stocks.
I totally agree. And I think not just like the high numbers, but also being able to buy an entire thing of something. It's like, okay, well, I've only got $100 to invest, and XYZ digital asset is only $1 a digital asset. I can get 100 of those myself versus whatever fraction of Bitcoin I can get for that. At the end of the day, you're still investing $100, with different return expectations. So there's not much difference. You're still making $100 investment, but I think that notion of I've got some, a whole of something is another thing that plays in psyche, which I'm sure has been discussed like within behavioral finance as well.
Yeah, I mean, and even going back to our point that we've touched on a few times, Bitcoin, and not only Bitcoin, but cryptocurrencies are different things to different people. A lot of people just trade, and they're just trying to make money trading, and they don't, they're just trying to make USD trading. They don't really care about. I remember reading a tweet that said something like, boy, if Tezos keeps going up, I might actually look up what it does one day. And I was laughing about it because it's true. I mean, there's traders that they don't care. They're trading. They're trading to make money, and these things are extremely volatile. A lot of the tokens, it's not. You can buy some random little thing and then have it go 10x or 50x if it's crazy times. And sometimes the technology, people don't care. It's enough to just have a marketing brochure. Like EOS is like the dumbest trash I've ever seen. And like, but it made a lot of people a lot of money, and you're not going to convince those people that it was a dumb project because they made a lot of money, and that was their goal. So it's like, well, it didn't matter if it was a technological dead end or completely centralized. Like, all those things that matter only matter to somebody who really cares about technology or has some ideological bent on it. I mean, and I've certainly, that's me. I originally got into it for more ideological reasons or those things. So, there have been plenty of times where I was like, oh, I'll never invest in that. That won't work. And then it makes tons of money. And I'm like,
yeah, you're like, I should have.
But then at the same time, some of it's not even around anymore. So I'm like, oh, okay, well, I was right in the long run. It did fail, and it's basically gone now. But that's the difference between essentially gambling and just trying to pick penny stocks or pick these tokens to try to catch a crazy appreciation event. Versus having a long-term kind of vision and long time preference, low time preference, and that's something that I think Bitcoin also teaches you over time. It's people engineering Bitcoin are focused on the long term. Bitcoin is being engineered to be a project that lasts many generations. People say, it doesn't have all these features, it's slow moving, and it's so focused on security. But yeah, that's because people want Bitcoin to last. It's really truly being engineered and designed to be stable enough and secure enough to serve as a reserve currency system, a monetary system. So, with that long-term kind of vision, that's I think what makes Bitcoin the most investable asset in the class over the long period of time. It is certainly the most conservative thing by orders of magnitude in the entire crypto space, if you want to define it that way.
I couldn't, I couldn't do a better summation of Bitcoin and the technology, but also the mentality of the long-term stakeholders within that particular space better than myself. So, with that, I think we'll just wrap it up. I think that was an amazing that was an amazing conclusion, not only of sort of the conversation that we've taken a couple different windy roads, but ultimately coming back to the central focal point where there's a reason why individuals like me and you have a very heavy emphasis and focus, not just in our personal lives, but also obviously in our professional lives, on this asset that is Bitcoin, for all those reasons. So I just want to thank you again for taking time out of your busy schedule to come on here and sort of jammer with me about different topics, related to digital assets. I'm sure we could go on and on and on. But I do appreciate you taking time and being the inaugural guinea pig of the Crypto and Muay Thai podcast.
Awesome. Yeah, and maybe we'll get into some Muay Thai and stuff next time too.
Absolutely, absolutely. I mean, that's what it's here. That's what it's here for. So next time we have you on, we'll definitely get a chance to talk about a little bit more fun stuff, like Muay Thai and also Kyoshin karate, right?
Shotokan. Yeah.
Shotokan karate as well. So we'll have an opportunity to sort of touch in all that good stuff next time we have you on. All right.
Awesome. Thanks a lot, Christopher.
All right. I appreciate it. I'll talk to you soon, Daniel.
All right. Take care.